As traders, we put a lot of time and effort into making money in this business. So we must make sure that we are putting things in place to mitigate the chances of us unnecessarily giving back profits to the market. So that's what we're going to talk about in this video. Let's get right into it. So we know losses are just part of the business, but time and time again, I see traders that have a good day early on in the session, just to end the session, giving back most, if not all, of their profits. Even worse, a lot of times they end up having a red day. So what motivated me making this video today is I actually did a similar thing yesterday. Now, before I get too deep into that, I'm going to give a little backstory to kind of explain, what led up to this. So over the Thanksgiving weekend, I took advantage of one of Lilu's sales and purchased another evaluation account. Now, the reason that I purchased this account was to stress test and really see what would happen if I used one of my more aggressive methods and just took every single trigger, regardless of historical data, regardless of my personal experience with things, and just removing any excuse for me to pass on a trade or pass on a setup. I wanted to see what would happen if I just took every single trigger, right? So that was, my motivation or my focus going into yesterday's session. And from that perspective, I actually did what I set out to do. I followed the plan from that perspective. However, in hindsight, I could have actually did that more efficiently and I could have got better results. Also, it led me to think about over trading and, what I witnessed with that with myself as well as other traders. All right, so that's the backstory. So let's go ahead and move forward with this talk and get into what happened in yesterday's session. All right, so here's my recording from yesterday's session. So let me go ahead and hit play so we can see what happened. Now, I'm starting this right before the trade. So we're seeing this setting up. I'm seeing some momentum come in. This is moving a little slow. All right, there we go. I saw that momentum come in and I went ahead and jumped into a trade once I got the signal that I wanted, right? Or the trigger, once my trigger hit. And so you're hearing a lot of orders being filled. You should be hearing a lot, because I took this and, a lot of, I took this in all of my accounts. But for this video, we're only going to talk about what happened here in this account. So if you hear anything else go on outside of what you see here, that's the other accounts. All right, so you see right there out the gate, I had a pretty decent trade. I'm calling this a zone to zone play. I'm not going to get into all the details about that. So but from that trade right there, I end up making $625, right? So that's a pretty good start. That's just 2 contracts on the NASDAQ, right? So let me see if I can go forward a little bit. Now, I don't necessarily have to keep narrating what happened in this video or in this session. So now the interesting thing, following that trade, the very next trade, I ended up giving back all of the profits and a little bit more. So now I understand, before y'all tear up my comment section, and I know there's going to be that person that's going to do it anyway, that's going to have something to say anyway. It's fine whatsoever. But I understand that that's not necessarily the ideal risk to reward ratio, but that's not the point of this evaluation account. This evaluation account is to get data, to be aggressive, and to, see what would happen if I would be very aggressive. It's really for collecting data and just getting information. That's what this evaluation account is for. All right. So I don't want to beat that. I don't want to ramble on too much about that. So I get it. I understand. I get it. Just understand it. I get it. All right. So anyway, if I end up passing the evaluation and making some money in the process, great. If I blow the account out, that's also cool, as long as I followed the plan and I really put, this method to the test, and I got the data that I was out to get, because again, that's the purpose of taking advantage of Lilu's sale and getting this new evaluation account. All right, so what played out yesterday in the sequence of events that followed those first 2 trades got my wheels to turning about over trading and unnecessarily giving back profits. So the first thing I want to mention on this topic is getting caught up in the big returns that you see traders post all over the internet for whatever reason. Now, it doesn't take $10,000 in a single trade to be a successful trader, right? We don't have to get big trades big win profits every single trade, right? Or even most of our trades. So let's think about it from this perspective. An average of $300 a day equals $6,000 a month. And that doesn't necessarily mean that you get $300 every single trade. So maybe you make $100 a day, $100 another day, $50 one day, and then you get a nice runner and you make $500 in that trade, or $500 in that day, and maybe you make $600 the next day, and it drop back down to $200. And on average, if you average all of that out and it equals $300 for this example, that could be on average a $6,000 a month, right? So what could you do with $6,000 per month, right? And I know for a fact that taking or making small profits add up over time. And realistically, the market fluctuates. So of course your P&L is going to reflect that same thing. Hopefully it's growing over time and not going in the opposite direction, right? So the whole purpose of what I'm saying right here is just don't get caught up in what you see other traders do. You're trading for yourself, so focus on what works best for you. As a general rule, it's better to focus on the execution of your strategy and plan versus the results of your P&L. So getting back to what happened with my trading yesterday as an example for this topic, what are some things that I could have done better to avoid or mitigate me giving back all of the profits that I made from that first trade? Now, the first thing is I could have had a done for the day threshold or rule inside of my plan that dictates how much profit will indicate that I will be done trading for the day, right? So let's just say, for instance, in this situation, let's say if I hit $600 in a day, knowing that a $300 a day average would give me the kind of $6,000 month. I could just have it like in my strategy or in my plan that says that if I make $600 a day, I got to be done trading for the day. I can, keep watching, or I got to just go do something else, right? So this one is kind of debatable because maybe today, this is a really hot day and the market keeps going and I could have made so much more, money, or I could have added so much more to my P&L, which gives me so much more cushion. Or, maybe tomorrow is not as good, and just over the next several days, the way that the market plays out in relation to my strategy ends up adding more to the loss column of my profit and loss situation, right? Or maybe what happened yesterday, you just don't know what's going to happen in the future, right? The maybes can go on for days, right? So that one is kind of debatable, but from my personal experience, it is a good rule to have, to know that, okay, if I hit this target, if I hit this threshold here, if I hit this number here, then I'm going to be okay with that number and I'm going to stop trading for the day. I have an appropriate risk mitigation rule inside of my plan, and I will be okay to, just stop trading for the day and come back the next day and look for another good setup, right? So that is one method. Debatable, but it is one thing that I could have done, right? So the key here is having a long-term perspective. Typically, the best approach is to aim for consistency, so that over time you have your consistent approach where you can come in every single day and at least, not give back your profits and be able to trade the next day, right? And I've seen traders overtrade, giving back hundreds of dollars a day, even thousands of dollars a day, or six figures or more a day, right? In a single day, within minutes or hours, right? So it's not about how much money that you have in your account to trade with. It's more so about how consistently, or the consistency that you have found within yourself first as a trader, and as a human, this as a person that trades in the market, right? And the consistency and how that reflects into how you consistently execute your plan and your strategy, right? So it doesn't really matter how much money you have to trade with. Your mindset, your discipline, and your awareness is what matters the most, right? Consistency is a must. Small wins add up over time. So if you want to, as you grow your account, if you want to start, aiming for bigger profits, all you have to do with your consistent, method, with your consistent approach to the market, all you have to do is just adjust your position size, and you'll be able to achieve the results that you desire, right? And also, markets generally spend more time in balance, so it makes more sense to have this consistent approach than always trying to, aim for Hail Marys or home runs, right? Plus, once you find your consistency, that gives you more flexibility with more cushion in your account, right? To maybe go for bigger targets or try different things out. Worst case scenario, if it doesn't work, then you have your consistency that you can just fall back on, right? All right, so moving on. Now, the second thing that I could have done to get a better result yesterday is after that first trade, the following trades, I could have mitigated the risk or taken the following trades with less risk. All right, so what that would mean for me as I'm trading futures is I could have either switched to micros or I could have decreased my position size. Yesterday would have actually made more sense for me to actually switch to micros. So that way, if I want to keep testing this and being aggressive, I'm not putting so much money on the table, right? Or if I want to continue, it was early in the day. So let's say within my plan, if I hit that target, if I have a big win within the first 15 minutes, I trade it. My trading session usually lasts an hour, 45 minutes to an hour. So since that was still so early, if I wanted to still, be open to taking another setup, I could have just switched to micros. That way, I'm not putting all of that risk on the table, and I can significantly decrease the amount of risk per trade and still, work on getting experience and exercising those trading muscles, right? Now, talking about this brings one more thing to mind. Another thing that I could have done, kind of as a third bonus, is I could have actually just switched to sim mode. It's easy within Sierra Chart for me to switch to sim mode within the session. So I could have switched to sim mode and still got the data that I was looking for. I could have still, got some more experience and exercised those trading muscles. So, that's a third thing that I could have done. All right, so that's 2 ideas plus a bonus of what I could have did to have a better outcome from yesterday. So what are your thoughts on this? Is there anything else that I could have did or is there another approach to take to mitigate overtrading or giving back unnecessary profits? Don't say the risk and reward ratio, but anything other than risk to reward ratio, we already get that. That's basics. That's 101. I know it's gonna be that still, but okay, whatever. Anyway, leave your thoughts and your comments in the comment section below, and I'll go ahead and check it out. And if you got some good stuff, maybe I'll make another video on it and give you a shout out with your suggestion, your idea. All right. So that's gonna go ahead and conclude this video for the day. Hope you found it helpful, and I'll see you on the next one. Trade it easy.